What's going on, team? For those who don't know, my name is Tyrese Collins, and today we're going to be going over a stock that can give you over 20% return on investment. And yes, you guessed it, you see it here. It is Apps Digital Turbine Inc. And what I see here is a possible reversal that is happening right now, and it's something that I really want to look into. As you can see, we're looking at a 180-day 4-hour chart on Thinkorswim TD Ameritrade platform, and this stock has currently showed in the past 180 days that it has been very bullish. But in the past, after a correction, it has popped back up. And so we see another correction here. Earnings report, investors didn't like earnings, and you saw this massive sell off here. So I am beginning to buy. Unfortunately, I bought a little bit too early around these levels. My average right now is at $76.20, unfortunately, but I am continuing to average down and continuing to take advantage of this potential reversal. It is showing signs of confirmation as we see these green candles here. It is up 4% on the day, which is a good sign. We like to see that. Now 5%. So we're 100% rallying right now, which is absolutely amazing. Now, the key part that we want to look into is the test at the simple moving average 200. This red line here, it's the average price point of where the stock has been in the past 200 days. And what we need to consider is that investors like to use this as a support and resistance line. So, what is an example of that? Well, we see here that it consolidated around these levels and tried to pop back up, but it was a resistance line and got rejected at the 200 SMA and continued to sell off. Then popped back up, tested again, began to consolidate on it, and then it was able to break up. So what we need here is a break above the 200 SMA line to begin to buy more, because that gives us more of a confirmation. Once it continues to break and continues to move forward, we can then begin to see our 20% gains start to take into effect. So this is a swing position for myself, not a day trade, and we are going to be able to take advantage of this by slowly watching it over time and slowly adding into our position as it begins to increase. We want to make sure that we are taking confirmation and account that it can potentially sell off, and we want to make sure that we create a stop loss. So, in my defense, I think there is a support level right here around, let's see here, $67. I don't know if I want to go that far at my stop loss. So I think I will stop loss at around $70, $69 a share here if it does have a drastic sell off. However, I do believe in this company for the long term. So I could maybe change my game plan and just say, hey, I'll buy more shares and just hold it on for the long term, because I do like where this company is headed long term. And what do I mean by that? What am I seeing in the long term? Well, let's take a look here. So right now, we are looking at earnings report that just happened, right? And investors didn't like it. I don't know why, because it beat earnings by 5 cents, which is absolutely amazing. It continues to show annually and quarterly growth, which is absolutely amazing, right? When we look for a long term company, we look for revenue. And is the company producing more and more revenue every single year? That means money is flowing in all the time and constantly increasing. That means this company is on an incline, and we want money to continue, because what do we want our bank account to do? We want our bank account to continue going up. So as a long-term company, we are seeing apps as a great buy because the revenue continues to be strong. So yes, when I'm purchasing this company for a swing trade, I am not afraid of it possibly going down, because in my based off of my technical analysis and analysis of the company, of where it's headed, I believe that this is a long-term company. Before it reached highs of $86 a share, I think we can test that again and possibly go into $100 a share. This thing can move quickly. This thing can correct quickly, and it's something that you have to be aware as an investor. If you do buy, that you have to understand that it does move fast, as you can see here on the screen. So just make sure you buy small portions at a time, ride the waves up, and if it corrects itself, make sure that you either cut your losses, or if you feel comfortable with the company like I do, buy at a smaller price to average down to begin to take advantage of the upward trend. Like I said, if I need to take losses, I will possibly take losses at around $70 or $69 a share, but I don't see that happening anytime soon. And if it does, then I will reconsider either taking losses or just buying more to be able to ride the wave back up. So that's my analysis about apps, why I think this company can give you over a 20% return on your investment as we speak. Thank you guys for watching. I appreciate it. And as always, smash